Good morning, everybody. It's the 14th of July. It's Friday. Welcome to the end of the week. We are Signal Centre. I'm Joe, joined by Steve. Good morning, Steve. How are you?
Yeah, good. Thanks, mate.
Excellent.
End of the week again, eh? Here we are.
Yes.
SEC have finally let the cat out of
Ripple.
the bag.
Yeah, big move to the upside. We'll get onto that shortly and discuss that. Steve's obviously been mentioning that for a while now. That has been a major catalyst that we've been waiting for on some of these cryptocurrencies, particularly obviously Ripple. I haven't been following it. I don't think it's closely as you have, so maybe you can update me as well when we get there. But let's do the headlines first of all. So, subdued producer prices yesterday. The US producer prices increased 0.1% for June after a 0.4% decline the previous month. The year-on-year increase declined to 0.1% from 0.9% previously, which was below the expectations of 0.4%. US jobless claims also edged lower. The decline was to 237,000 in the latest week, revised from 249 in the previous one. We've continued to see some mixed Fed rhetoric. The San Francisco Fed President Daly stated it's too early to declare victory on inflation, but the good news on inflation this week is indeed good news. She added that saying that 2 further rate hikes were needed was a way to keep optionality open. She also stated that nominal rates would come down as inflation comes down. We also had another Fed governor, this time Waller, stating that a notably hawkish stance was still very much their opinion, with comments that 2 further rate hikes again needed. So they all seem to be reading off the same hymn sheet. The risk appetite across the board seems to have strengthened. Hopes for moderation in inflation and a peak in interest rates continue to boost risk appetite, with significant gains for risk-sensitive assets seen during the day. Despite those comments, the dollar continues to slide to the downside. That's now at a 15-month low before we saw a slight recovery. We've also seen some further speculation from the Bank of Japan. There were reports that the bank would increase its inflation forecast and potentially adjust monetary policy at the July meeting with the changes in the yield curve control program. Today, we've got US consumer confidence data. The latest University of Michigan consumer confidence data will be released later. The inflation expectation data within the release will be closely watched after a sharp decline recorded last month. Okay, so let's get into it now. Talking charts, we're going to start off with cryptocurrency. There has been a big move in one of those markets in particular. Steve, what's going on?
Yeah, let me share my screen first, mate. Oh, looking at DAX as well. Let me just get cryptos up. Yeah, shall we even bother talking about Bitcoin? Bitcoin, what coin? Here we go. Well, I will just cover it off quickly. Still in the range, actually, after the result yesterday. We can sort of like run through exactly what that means, and I could give a brief history lesson, but I don't think there's any point in going into detail. We're just talking about price this morning, but Bitcoin reacted higher, obviously, on the back of this news, because it does have a bit of an impact on cryptocurrencies as a whole. But we still haven't quite managed to close above these highs that we created on the 6th of July and the 23rd of June. We're very close, but we're just pulling back. We spiked through it, got up to 31,800 before pulling back, and a little bit lower this morning from last night's close. But so still stuck within this range at the moment, but definitely more to the upside. Remember, Bitcoin, we're looking at a couple of this inverse head and shoulders formation that has a measured move target around about 35,000, and also a bullish flag formation has a measured move target around about 36,000, and there's other areas of resistance around that 35 to 36,000. So wouldn't be surprised if we move up there. I still remain bearish overall on Bitcoin. That's it. That's out of the way now. We can really talk about the juicy stuff. So this is the move we've seen yesterday. At one point, we saw almost 100% rally, so almost doubling your money in this market. Here we go. 99.45%, not bad for a day's work. So anyone who was holding Bitcoin at yesterday's open had an opportunity to sell out of it for 100% profit. So you can't say that about many products in one day. Sorry, Ripple. Sorry, yeah, XRP. Don't call it Ripple. XRP. XRP USD. Let's be more accurate. So what does that mean overall? So if we go back on the charts, we were sort of like one of the main formations we were looking at, because we were talking about this sort of bottoming formations that we've seen in all the cryptocurrencies. There was a double bottom formation here. The neckline of that was 55.80. We spiked through that around about end of March, got up to 58.5, and also had a spike up to that in the middle of June. But now we've just sliced through it like a knife through butter, because the SEC has basically decided that Ripple, Ripple, when it was originally sort of sold, they said it was a securities token, which needed permission to sell. So that's what it was all based on. They raised 1.4 billion in 2013 by selling XRP in an unregistered security offering to investors. However, XRP argued that it should be treated, or Ripple argued it should be treated as a should not be treated as a security, because of previous comments from an SEC director to support its case. But anyway, they've agreed. The decision yesterday, court found that XRP, and thus cryptocurrency, was not a security when sold to the public, but it is an unregistered securities offering when sold to institutional investors. So that's what the case is. It's sort of like it is and it isn't. Lovely. We got loads of clarity on that now, so we can all relax, can't we? Well, what did that mean? I mean, it's a bit of a shame, really. Obviously, if you're following YouTubers who are talking about XRP, you'd expect this to be worth £10,000 this morning, but it hasn't quite reached $1. So there's still a bit of a way to go if you're hoping for that. So let's take a look at the levels on the chart that, from price action, that we would be more interested in. So if we sort of like take it from, let's obviously at one point it was up, we were up close to $2, but the most recent high, or the lower high after that, was around about 141. So taking from there and the sell off all the way down, we can put some Fibonacci retracement levels in, give us an idea where there may be some sort of resistance after we've broken up through this double bottom formation. The measured move target for the double bottom was 83 cents, and it reached that yesterday, so that's been ticked off. We've got a 91.50 level, which was from the highs of 8th February last year and the 30th of March last year, so that's quite key. Also, we have a 161.8 extension level from this double bottom formation. So this breakout from the bottom, 161.8 is a level to aim for. That's just below $1. And also we got 61.8% fib. So we got a confluence of Fibonacci retracement, Fibonacci levels around about this dollar level. So again, that's maybe why we stalled in front of it. We may have had some technical traders looking at that and thinking, okay, if this does explode higher, I'll stick a few offers in here, take a bit of profit, let it settle down, and maybe go again. Who knows? Who knows what we're all thinking? But anyway, we have broken up higher. The job is done. It's all out in the open. What do we do now? So this reaction high, some people will not even have known this news because it came out yesterday. They'll be waking up this morning thinking, lovely, XRP's up. I can take a little bit of profit, or XRP's up, and let's get some more on board. But we'll have to wait and see. So for me, from a technical point of view, we're in a bit of a quandary. We're in sort of no man's land almost. That dollar level for me is key on the resistance side of things. We break above there, then we're definitely targeting like 120, 140. However, if we don't manage to sort of extend quickly above this level, then we may settle down a bit and then start to form maybe a bullish flag. A bullish flag will have a measured move target probably around about the 150 level, because we've moved from around about 50 cents up to $1, and then you'll extend that higher, roughly 140 maybe, we'll say. However, we have had a pullback today. We've got back down to 72.40. So from a technical perspective, that is the current today's support. And then obviously we've got all the way down at 58.5 cents is the next support. So that's the levels I'll be looking at. As I say, a lot of people expected this to explode once this case was out of the way, to go 10, 15, 20 times multiple. And that was a load of horse. because that sort of thing just doesn't happen, especially when you've got millions of people holding this sort of thing. You don't see them sort of returns. It's only when you've got the sort of like people in the know with that sort of level of holding that you get them sort of things happening. Anyway, I hope that's enough. Any more questions on XRP, please feel free to pop them in the question box while we're talking, and maybe I can cover them off at the end. So let's talk about gold and commodities, gold and oil. We'll have a quick look at these. Gold has continued that moves. 1964 we've stalled around, trading around 1956 at the moment. So again, are we posting another lower high? We've got these highs back from early June to mid-June, and also the 1980 level, which is it's a bit of a range really, between anywhere between 1970 and 1980 should form some sort of resistance. Also, let's just pop a little bit of a fib on here to give us a bit more of a clearer idea. The 61.8% fib coming in at 2000, very nice psychological number. And we're above the 38.2. The 50% is coming in at 1980. So we've got resistance at 1980 with a fib retracement level of 50% fib. It's not a great one, but we still look at it. Shorter term, obviously the 4-hour chart highlighting that inverse head and shoulders formation. That's got a measured move target of 1980 as well. So I'd be definitely looking at that. And are we forming a bit of a bullish flag here on the 4-hour chart? Looks like a bit of a diamond top formation. So be a bit careful. Support really coming in at 1952. Again, 1950 is sometimes psychological. So that's where I'd say support is today. A break below there, and we could be going all the way back to test that 1935. Crude oil has had a spike up this morning, and levels it hasn't seen for a while. Since the last lower high, we've just hit the 78.6% fib retracement level at just below $72 and stalled reversed at the moment. Are we forming a short-term top? Too early to say really. It's only, the range is only like 60 cents. That's a small range. We've had obviously oil inventories out yesterday, and Wednesday that was. The oil inventories were good this week. So yeah, seeing a nice extension higher, bit of an ABC correction potentially. So as we're coming into the end of the week, are we going to see some profit taking? Maybe that's what we're going to see. Apart from that, I'll hand over to Joe to have a look at the dollar and all its friends.
Let's take a look at the dollar then. So further downside yesterday, another big red candle formed on the daily chart. So we talked about this 100 level potentially offering some psychological support. It didn't. It just absolutely smashed through that level. Some really big red candles here, some really large ranges, as really investors and market participants shun the US dollar as an asset to own in favor of riskier assets. So looking for anything that's trading against the US dollar, commodity-based currencies, and stocks as well, of course, which we'll come on to in a little while. So in terms of where the selling ended, I mean, it continued overnight and into this morning. We can see the wick of the candle here came up just shy of this support here at 99.42. If we scroll back to the left-hand side, we can see that there is some previous support in this region here. Slightly below that, we've got the 61.8% fib level at 99.17. In terms of the conditions, looking at the indicators, we can see that the dollar is heavily oversold, but we don't have really any major sort of reversal signals. There's no divergence on the chart there to indicate that any sort of consistent or turnaround really that we're going to see is going to be sustained. So now we're obviously focusing on this previous support now turned resistance. So we've got these two lows, or three lows you could argue, that comes in at 100.82. So potentially looking for a retest of that level, and it'll be very interesting to see what sort of reaction we get at this zone here, because that will dictate the overall direction, suggesting that if we get resistance in here, we'll see a continuation lower. Obviously, if we can break back above it, then maybe there is some scope for some further bottoming price action, but this is not going to happen quickly, I wouldn't have thought. So for now, the pressure remains on the downside, just a minor correction taking shape today. So looking at euro US dollar, so we've seen a very strong break to the upside here. Interestingly, we're actually seeing a retest of the underside of this bullish channel. Whether there's anything in that or not, I'm not entirely sure at this point, but we do have this 61.8% fib level just above at around 112.74. So anybody looking for a speculative sell trade, selling maybe into that zone there could be a decent option. Alternatively, obviously, to take profit if you've been riding this to the upside. But ignoring that fact, and just focusing on the levels here, the break above 110.95 has been very strong. We continued higher yesterday. Yes, a little bit of profit taking, maybe settling in today, and may continue to do so as it's a Friday. We could see some book flattening ahead of the weekend. But all in all, that is looking pretty strong indeed. Looking at cable, that continued to march to the upside as well, breaking through this resistance at 129.81. If we go back to the left-hand side, we can see there was a little bit of what was previously support. Expected it to do a job as resistance, which it hasn't really done, and the prices have just marched through that very easily indeed. So looking very strong there. Yes, potential for a little bit of a corrective pullback today as profit taking sets in. Any pullbacks now likely to find support at that 129.81 level. Let's take a look at some of these commodity currencies. So they've been on a march as well, but still underperforming the likes of euro and sterling at the minute. We can see this has rallied into some resistance here at 68.99. This was a previous swing high from back in mid-June. So we've rallied into that level, not quite been able to get above it. I will be keeping an eye on that today because if we can clear that, then it potentially opens the path for a move up to 70.76. I'm assuming similar situation with New Zealand dollar. In fact, we've actually seen a break here above resistance at 63.79. So that's quite encouraging. We seem to be holding on to those gains for the time being. The pullback has found support at the previous resistance, now turned support. So that's quite encouraging. Providing it can hold that, we could be looking for further gains towards these resistance levels above. Let's take a look at dollar yen. So that's found support interestingly this morning. So that's been a really nasty sell-off in recent sessions, but seemingly finding some support around 137.91, some previous highs from back here in March and again in May. So that was resistance during this period. It then broke up, then held as support and doing a similar job today. Interesting looking candle there today, potentially a hammer candle into that support level. So that could be quite encouraging for any bulls out there looking to take advantage of this recent decline. Maybe even a candidate there for the gun to the head trades. Okay, while we're on the yen theme, we've had a couple of requests to look at Aussie yen and sterling yen. So I will do that now. Let's take a look first of all at Aussie. So all in all, this is looking pretty strong indeed. So it's been a really nice move to the upside throughout this period here. This began back in March before eventually topping out in mid-June. So we found some resistance here. That was at 97.67. Seen a decent pullback to a 38.2% fib level and pretty much tagged that to the pip, and that's also in line with this short-term uptrend and also in line with this horizontal support level that we have around 93.06. So really nice reaction from there. Big move to the upside yesterday, little bit of a pullback this morning, but now pushing again to the upside and looking pretty strong. It may have something to do with that verbal intervention that we saw from the Bank of Japan talking about addressing the monetary policy program that they have there at their July meeting. So seems to have had a positive impact for Aussie, a negative one for yen, and we may see a continuation of that trend. So looking pretty strong there. If we take a look at sterling yen, this was my gun to the head trade yesterday. This is the daily chart. And the reason I was looking at this, well, first of all, it was mentioned by one of our viewers. So thank you for doing that. But it was bang on trend support. Yesterday, we were trading pretty close to this level at 179.92. So there was a horizontal support and trend support in here. So this was pretty much close to the point where we were either going to be right or wrong on this trade. It was as close as we could get really at the time. And it was a decent move to the upside. So a really nice bounce, not quite engulfing the losses that we saw on the previous day. But if we also look at today's price action, we can see there was a big move to the downside, but that's been recovered pretty handily today. Looking at it on the intraday charts, this is my trade ID yesterday. There was there was two ways of looking at it. There was a riskier way, which thankfully paid out. But there was a sort of longer term view where prices could get up to these sort of levels around 183.62. But looking at price action this morning, we have some resistance at 180, 145. We rallied into that level. That was the previous swing high from yesterday. And so far we've stalled. So keep an eye on that. If we can get above that, then it should open the way for further gains. If we continue to see prices stalling here, then we may see some choppy sideways price action in the short term. Okay, that's it from me on the currencies. Steve, over to you on the indices.
Yeah, let's take a look. The indices aren't doing what I wanted them to do, but yeah, let me share my screen. There we go. Yeah, looking at DAX really short term, it's had a really nice breakthrough. This was a potential. Should put a potential on here really. Downward trending resistance line. I mean, for 4 hours it was a trend line, but broke through quite quickly and broke up through there and forming a bit of a triangle formation at the moment, looking for potentially an extension higher. But we have had a stall now at 16,185 on there. The previous swing high was 16,210. And yeah, we've seen a really nice aggressive rally over the week. And if we look at the weekly chart, you can see how much this actually means. And inside Harami at the moment, into this resistance level, and we've still got a few hours to go for that to take out, maybe form a bullish engulfing candle. That could lead to further gains over the next few weeks. If we look at FTSE, similar sort of price action, but not quite as aggressive as the DAX or Germany 40. We've reacted from just in front of 7,200, and the resistance we're looking at the moment is 75.63, which was the previous week's high, and the also the closing price for the week before that. So that's really where the bulls will be targeting to try and get above that level and basically post a higher low. On the Dow Jones, we broke through the downward trending resistance line. We a bit of a triangle type formation here again, but we didn't stay above it for too long and retraced so far this week. We sort of like, yeah, looking at that a bit more closely on a daily chart, actually, you can see the spike higher ending up in a bit of a shooting star type candle, and again, followed by another one. So stalling over the last couple of days since we've hit this resistance level. So maybe a step too far at the moment, but the short-term charts are looking quite positive up until 2 o'clock Wednesday when we got that shooting star candle. So looks like a little bit of a, as I say, a little bit of a triangle formation. Support really around about the lows of today, 34,300. That's where we'd be sort of like, you know, really sort of like hoping for, expecting a little bit of support coming in there, 34,300, just above there. And a break below there should open up the downside quite quickly, and really on the resistance side of things, really targeting just a move to 34,500. A break above there then retargets that that high on the week. So yeah, that's pretty much it. Now, well, Nasdaq outperforming still, and S&Ps, yeah, again, these sort of rallies are unsustainable. They'll have to have some sort of pullback. Probably support, you're looking at 4,490. That's a short-term support in S&P, and again, a break below there clears the way for a retest of that 4,465.
Very nice. Thank you very much, Steve. Okay, so gun to the head trades. This is where Steve and I pick trade ideas live on the stream. As if we had a gun to our head, we pick trade ideas with stops and targets. We must have risk reward ratios on these ideas of 2 to 1 or better. That is our number one rule. The trade ideas are closed out at 9 o'clock in the evening UK time, unless we reach the stops or the targets beforehand. In terms of money management, we risk 1% of trading capital on each of these ideas. We've got an account, or did have an account, of $2,000, £2,000. It has taken a bit of a hit, but thankfully, Steve, we actually had a winner yesterday, one that went
You
on to
did,
his
Joe.
target.
Well done. Yeah, nice one.
It
Just
feels like
looking
it's
at it
been
now.
ages.
It does. It does. I don't think we've hit target for a long, long while. Maybe this is the turning point. Obviously, your sort of your trade idea to buy sterling yen played out really nicely.
Yeah, it did. I mean, obviously, when we're looking at these trade ideas, we are primarily looking at markets on a technical basis. So we're looking for nice technical setups on the intraday charts. And sadly, markets do go through phases where technicals just don't seem to have the sort of effect that we expect. And, it's important, I think, not to get disheartened by that because ultimately, we're just playing the market's game. We've just got to adjust to the circumstances that we're in. But we also do go through phases where technicals work very well, and we can go on mad runs of profitability. And we're hoping that maybe, Steve, this is the turning point today, and we can start picking a few winners. Anything standing out for you this morning?
Not a lot, mate. I'd love to be sort of selling into these indices. You know what I'm like. I sort of always see the opportunity on the downside, but nothing really jumping out at me at the moment. Let's get on to here. So have you got anything I mean,
Yes.
the gold, for instance, I'm sort of, again, I'm thinking, have we reached that sort of like point of resistance where we may just have that pullback? It's all really, we've got to think about the dollar really on that. It's really important. The dollar drives the gold price really. So yeah, go ahead. You go first, and then I'll have a little flick through.
Okay, let's do it. So I'm going dollar yen today.
Oh,
So this is the daily chart. Been a nice move to the upside in recent months, stalled into this level here, big drop off. But if we go from the lows to the highs, we've got a 38.2% fib level, exactly where the price is at the moment. And we've also got some horizontal resistance here at 138.19. Now, if we look at the candle that's formed on the daily chart, what we are seeing is potentially a bullish hammer candle. So we've made lows this morning, but the recovery has been quite impressive, and that may indicate that we are seeing a short-term bottom form. Now, obviously, it's very early in the session. We do have some data out today as well, so that could change. So I'm only basing this decision on what I'm seeing at the moment. Obviously, if I wanted to commit to this on a longer term basis, I'd want to see this close at this level to form this candle, but we haven't got that luxury at the moment. So what I'm going to do is take a look at things from an intraday basis and see if there's anything there that's offering any encouragement. We've got a short-term downtrend here, which looks as though it's broken in the last hour or so. We've got some resistance there that had formed at 138.19 and prices have moved above that. So I want to buy it at the current level. I'm going to have a pretty chunky stop by looks of things. So what I'm going to do is go a bit more aggressive. I'm going to go with a stop at 137.72. So that's below the low of the candle that we've seen in the last hour. So that was kind of the breakout candle of this short-term downtrend. And for a target, let's go with a move to 140, 139.98, just below a big round number. So it's a 2.3 or so risk reward ratio, I believe.
yeah, you're on, mate. You're in.
Okay, so Steve's got that on, risking 1% of our account balance. Let's see how it plays out. Steve, over to you.
I like that one, Joe. He's had a decent sell-off this week, maybe a little bit of profit taking before the weekend, because markets are shut at the weekend. So that's what happens. People do strange things, don't they? Anyway, so you're going for that sort of like dollar rally, and so if that dollar rallies, then the gold will sell off. That's what I'm thinking. So I'm going to fade the gold move. If we look at it from, do I need any other reasons? Maybe I can get one reason. We've hit the 38.2% fib retracement, so nice little maybe bit of profit taking coming in here. We have had a nice bottoming formation on the daily chart. We have had this like hanging man candle here and reacting lower at the moment. So everything looks potentially good for a little bit. Looks like a bit of a diamond top and breaking to the downside. I haven't got time to draw that in, but trust me, that's what I'm seeing. You can see this candle in the middle, which had the big spike. That was from last Thursday's 130 CPI, was it GDP? Yeah, so you draw the line from there to there and into here. And yeah, I don't know, it looks roughly like a diamond top. I wouldn't sort of like say it's classic. But we are testing this support level here, 1955. So I am getting in at a support level. So pretty risky. Let's Let's see if we can create an order from it. I want to sell at market. I want to see if I can do 1%. Yeah, risking £17.42. If my stop is at 1963. What if it's at 1964? That's risking too much on there. I'll target in a move back to 1935. What does that give me as a risk reward? So bring it back in. There you go. There we are, 1%, 1758. Stops at 1963, target at 1935. We're selling 3 units here and 2.67 to 1 risk reward. There we go.
Best of luck. So we're both banking on some dollar strength following a period of pretty aggressive selling. So let's see if there's any bounce today. Obviously highly speculative, going against the trend, but that's potentially where the biggest rewards lie. So we've accepted the amount of risk that we're taking on these trade ideas. We're risking 2% of our overall balance in the hope that we can make, well, collectively something close to 5 as a return. So let's see. Okay, data-wise, a couple of bits out today that we need to be aware of. So we've got the University of Michigan Consumer Confidence data. That's out at 1:30 UK time. And then we focus to next week, where at 3 a.m. we have Chinese GDP. That's 3 a.m. UK time. So I don't fancy getting up that early, so probably means I'll be clearing the decks of any trade ideas that could be impacted by that today. And that may be why other people are doing the same. So it may be why we get some profit taking if there's been some big moves this week, because I'm assuming people will be closely watching that data. You know, the growth engine of the world reporting a pretty big number on Monday morning. So for next week, we've got US retail sales. And we've also got the latest read on UK inflation. So these numbers will be closely watched. Okay, I think that's it from us today, Steve.
Yeah.
Thank you, everybody, for watching and commenting. We hope you have a fantastic weekend, and it's been a great week for you in the markets. And we will be back probably Tuesday next week.
Yeah, especially all you XRP lovers.
Yeah, well done to you guys.
You can even take a little bit of profit and enjoy your weekend.
Well, they're probably still down from when they got in last time.
Well, you know what? Basically, it's funny. When we had the big bull market rally, XRP didn't go anywhere near as much because of the threat of the SEC case. So, you know, potentially, you know, the sort of like the all-time highs in XRP are probably a bit closer than the all-time highs in Bitcoin on the back of that. But obviously, the SEC can appeal this decision. So
right, is that an issue? Is that causing issues, do you think?
Yeah, I think that's sort of like you know, in people's heads at the moment. So anyway,
yeah,
let's
take
just
your wins when you get them, guys.
Yeah,
enjoy
the good news when you get it. So yeah, good luck with that.
Superb. Right, have a great one, everybody. We will see you very soon.
Cheers.
Bye.